All right, welcome back inside our proactive newsroom. And joining me now is Stacey Morris. She is the head of energy research at Vetify. And Stacey, it's great to see you again. How are you?
Doing well, Steve. Thanks for having me.
Yeah, today we're talking about the Illyrian Midstream Energy Dividend ETF, and maybe you can just sort of remind us a little bit about that and really what the companies involved in it are.
Sure. So the underlying index is a mix of US and Canadian midstream energy infrastructure corporations. These are companies that perform what I like to call the shipping and handling function within the energy value chain. They're providing services under long-term contracts and they're generating fees. So this is a portion of energy that generates much more stable cash flows than other energy subsectors. So it's a dividend weighted index, predominantly of US and Canadian midstream corporations. And then there's also an allocated exposure to US master limited partnerships.
Yeah. So why are investors allocating to midstreams these days?
Sure. So typically there's a few reasons that people will allocate to midstream kind of day in, day out. Income is one of them, real asset exposure, diversification benefits. But particularly why we're seeing people allocate now, I think there's kind of three key reasons. First is the outlook for natural gas demand growth in North America. Midstream benefits from those growth trends. We're seeing a lot of opportunities to build new pipelines or expand existing pipelines with really pretty attractive project returns. And so the positive outlook for natural gas is a big theme right now. And I think that's really been a reason for people to allocate to midstream. And midstream provides exposure to that theme without the exposure to natural gas price volatility. The other
Okay.
reason that I think people are allocating is they're looking for more defensive energy exposure. There's been a lot of volatility in oil so far this year. And so midstream being fee based is more insulated from that commodity price volatility. With a nice yield, it can be a good place to kind of ride out some of that headline risk around oil. And then, thirdly, as I mentioned, this is a space that people come to for income. We continue to see very strong dividend trends in this space. And for investors, midstream is going to offer a more attractive yield than you'll get from things like utilities or REITs. So I think those are kind of the key reasons that we're seeing people be interested in the space today.
Yeah, volatility seems to be the key word these days, that's for sure. Let's talk about Q1. What sort of takeaways are you seeing for investors?
Well, I think the biggest takeaway here is that we're not seeing volatility in midstream expectations for 2025. So across the board, companies came out and reaffirmed guidance that they had given earlier this year or in late 2024 and essentially reaffirmed their EBITDA expectations for 2025. And I think that's a really sharp contrast with some of the things you're seeing in other sectors where companies are just having to pull guidance because of tariff uncertainty. So this really reinforces just the steady cash flows that the midstream space generates. So I think that's the biggest takeaway. As I mentioned, we continue to see good dividend growth that was on display in 1Q. And then, as I've also talked about, we continue to see companies announce natural gas growth projects and advance different opportunities there, which remain very attractive.
Where is midstream seeing growth opportunities there, Stacy?
Yeah, so natural gas is front and center, and that natural gas demand growth is really being driven by rising LNG exports, so liquefied natural gas, and then also power generation. Electricity demand in the US is growing now, kind of for the first time in a long time, and that's going to require more natural gas, and it's going to require pipelines and other infrastructure to get that natural gas where it needs to go. So we're seeing a lot of opportunities on the natural gas side, and companies are signing agreements for 20-year contracts with attractive contract features and really robust opportunities there. We also see a lot of growth for natural gas liquids. Natural gas liquids are things like ethane and propane. And there's really growth opportunities kind of across that entire value chain between a well where they're produced all the way to an export dock where they're loaded on a ship for export. There's a number of companies in midstream that are expanding or NGL export capacity or expanding just processing capacity for NGLs. So those are kind of the key areas where we're seeing growth opportunities today.
Yeah, very fascinating stuff. Stacey, thanks so much. Great to catch up with you and see where things are at. And it's good to see volatility is not in the forecast, which is a positive. So good to see you again. Thanks very much.
Thanks, Steve.
All right, there's Stacey Morris. She is the head of energy research at Vetify.